Good afternoon or good morning, everybody, and welcome to Fintech Nexus webinar. My name is Peter Renton, Chairman and Co-founder of Fintech Nexus, and we have a fascinating hour here for you where you are going to be talking all about real-time pay-to-card, how high-performance payouts, why real-time pay-to-card is revolutionizing access to cash. We have two experts with us here because real-time payments across the industry is becoming more and more top of mind. And it's coming to the stage where you really need to have it if you want to serve your customers well and you want to differentiate yourself. And so we're going to dive into use cases, how it works, why you should do it. And we're going to be talking in depth about a lot of this. So with that, I will introduce our panelists or let them introduce themselves. So Justin, why don't you go first?
Thanks, Peter. So my name is Justin. I lead our global sales and partnerships for Visa Direct here at Visa, which is our global money movement platform. So really excited to be here with you and Zach today.
Okay, Zach.
Likewise, Zack Levine, thanks for having me on. I lead our commercial organization in North America. I cover Israel as well. I'm with Checkoutcom. We're a global e-commerce platform for large businesses. So we work with enterprise companies like General Electric, Alibaba, Klarna, and many others. And we've worked quite closely with Justin and the Visa Direct team on this product, and quite excited to chat more about it. As you said, Peter, a lot of new and interesting use cases, and in many instances, card payouts have gone from becoming a nice to have to a must have.
Okay, so let's start with you, Zach. How does Checkoutcom play in the real-time pay-to-card space?
Yeah, so as I mentioned, we in general work with companies that sit more up market, so mid-market companies, enterprise companies. And they have more sophisticated use cases, new business models, and they bring us business problems to help them solve as it relates to payments and money movement. We try to deliver all those solutions through a single API. So across our platform, pay-ins, payouts, card pay-ins, card payouts, other forms of pay-ins and payouts, local payment methods, fraud, authentication, et cetera. We try to offer whatever the solution is through that single integration. So I would say thing one is, pay to card has become a really important and necessary tool in our toolbox to help those clients solve all sorts of business problems. And I know we'll talk about use cases later on in the webinar. I would say secondarily, what's a little bit different about Checkout's pay to card offering and our approach in general, given the clientele that we serve, we've tried to build our Visa Direct product with the utmost level of flexibility. So clients can really pick and choose the features that they want and discard the features they don't want. So things like, do you want to pay out domestic or cross-border? Do you want to pay out from, the US entity, a European entity, UK entity, APAC entity? What's the funding mechanism that you want to use? Do you want to net off acquiring? Do you want to pre-fund? How do you want to handle FX? We give you the opportunity to look at the FX rate before you actually decide to proceed with the payout. So those sorts of features, I think, are quite unique in terms of us being able to bring those to customers. And again, with the clientele that we serve, it's quite important. And I would say the last piece is, given the relationship that we have with Justin and the team, we're fortunate to be able to sit down with them quite frequently, review what we're seeing in the market and what we're hearing, and try and incorporate the latest and greatest from what our customers are asking into the product set that we're building. So I'd say the last piece is just the unique level of agility and the ability to iterate together to constantly refine and improve the Visa Direct offering.
Right, and you're focused on the US, right, Zach? And so you're live. You're partnering. Are you partnering with Visa Direct globally, or are you this focused just on the US? Just what's the geographic sort of footprint?
Yeah, no, we partner with Visa Direct globally. I look after North America, but many of our North American clients have global use cases and requirements to serve customers all over the world. So obviously North America is quite a large e-commerce market. And so the way it works is many of our merchants might be domiciled in the US or have decision makers or headquarters in the US, but they have local entities all over the world where they want to be able to support their customers, their partners, employees, dashers, drivers, whoever they might be. So I have a a great team of counterparts in other parts of the world that do the same, but we work with Visa Direct globally.
Okay, so Justin, I think a lot of people have heard about Visa Direct. They might know something about it, but why don't you just sort of really lay it out for us here? What is Visa's role in the real-time money movement space?
Yeah, no, thanks, Peter. And I think Zach did a great job talking a little bit about sort of partnerships and how we take that product to market. But if we take a step back and we think about what is Visa Direct and why are we talking about it today, um, I think it really is all of the flows. It's in short, it's Visa's money movement platform. But what does that mean? We would consider money movement to be really everything outside of the core consumer to business payment flow. So everything outside of swiping a credit or debit card at a merchant, like a 7-Eleven or Nordstrom, all of the money flows outside of that, including P2P payments, business consumer payments, B2B or B to small b payments, or even G to C government to consumer payments. Those are all flows and use cases that would really fall under the Visa Direct or the money movement umbrella. And so, I think the best way to understand what Visa Direct is to, and we'll continue to, I think, dig into the use cases, the clients that we serve, in partnership with Checkout and others through the call. But I think that's sort of the best way to understand really what we're talking about when we talk about money movement. So with something like a business consumer disbursement, we'd be talking about something like an insurance disbursement, for example, like, an Allstate, for example, paying a P&C insurance claim. So those flows can be serviced on Visa Direct and are. We talk about P2P flows. In the US, there's obviously 4 very large P2P platforms: Square Cash, Venmo, Apple, Meta. All 4 of those platforms are really early adopters. So if I'm going to send money to someone like Zack, for a lot of those platforms, both the pull, the real-time pull, and the real-time push to Zack will run on Visa Direct rails. And even things like B2B and B to small b, depending on how you might define like a small b, a lot of those payouts for things like very large global marketplaces will also run on Visa Direct. So, think about an Uber driver receiving his or her his earnings to large marketplaces. I think we just announced eBay and Airbnb last year have both gone live for seller payouts and host payouts, respectively. So I think Visa Direct is really a global money movement network. I think in the US, we can serve those direct flows, but I think the power of the Visa Direct network really shines when you talk about our reach globally. And we can reach 8.5 billion endpoints, whether that endpoint is a card, a Visa debit or prepaid card, directly to a bank account, or even to mobile wallets. So that's a little bit about the Visa Direct network. But I think, as we dig into clients' use cases and the landscape of the market, I think it'll continue to build out that narrative.
Right. So how maybe you could just explain before we go on, Justin, how you work, how exactly do you work with Checkoutcom? How do you work together?
Yeah. So first, I guess Checkout is one of our oldest and deepest partners, not only like Zach mentioned here in the U.S., but also out of Europe, Middle East, Africa, and also Asia Pacific. And when we go to an originator or a merchant or a corporate, and we go talk about sort of the value of the Visa Direct network, we will not generally, in 98% of the cases, bring that partner directly to Visa. It just doesn't make sense for either party. Similar to sort of the payments and the acceptance ecosystem, the 4-party model, we built that same model into our money movement business. So we'll really be partnering with Checkout to onboard and distribute the Visa Direct product. So Checkout is really the front line to the partners that we would bring in, the originators, the merchants, the fintechs, et cetera.
Okay. So, the world of real-time money movement is becoming, more competitive. It's more, I think people are more aware of it now. And it's still not completely commonplace. I think for the average consumer, they are pleasantly surprised when something comes in potentially over a weekend or outside of business hours. But I'd like to kind of touch on help the audience understand why they should partner directly or indirectly with Visa Direct over the other unnamed real-time payout providers.
No, Peter, it's a great question. And I know Zach is actually sitting in London right now. So the real-time payments ecosystem is different in every country, right?
Mm-hmm.
We have, markets like the UK where Zack is sitting, where faster payments, their RTP scheme is really mature. But other markets like India, where UPI is, fully ubiquitous because of the government, really pushing to implement that across the board. But, just focusing on the US and with cross-border, given I think where a lot of our audience are listening from, in the US, certainly there's been a lot of talk about FedNow. And in 2017 with the TCH launch of RTP, there's a lot of talk about real-time payments. And when I think about why Visa Direct and how we fit in, if we focus on the US, it's all about ubiquity. Both FedNow and the TCH RTP, neither of those RTP schemes are ubiquitous yet in the US. And when you look at something like the TCH RTP, they really launched in 2017. If you look at articles from like 2018, 2019, including on their own website, you can see that they put their full DDA coverage somewhere in the upper 50, lower 60%. And if you go now, like right now to the TCH RTP website, you can see that total DDA coverage in the US is about 65% of all DDAs they can reach. And if you look at FedNow, they're being a little bit more hush on the numbers, but in my conversations, we expect that to be probably somewhere between 60 and 70% as well. And that's actually really good coverage because there's so many banks in the US. The long tail stretches on to thousands and thousands of smaller community banks and credit unions that have and service customers across the United States. And when you think about building a truly ubiquitous scheme, it takes decades. And that's what Visa has spent decades building. And Visa Direct is pivoting off that work. So when you look as a merchant or an originator at a real-time partner, if you want to be able to pay or service your customers and clients with a real-time scheme, right now the key differentiator in the US, amongst other things, is really ubiquity, because you would have to not only implement a FedNow or a TCH RTP, but also something like a Visa Direct or a card push to sort of card scheme in order to be able to serve 100% of your clients. And Visa Direct, just to be clear, in the US is above 99% enabled, as well as real time, what we would call fast funds ready, which is sort of that real time requirement. So it really comes down to ubiquity here in the US.
Right. So just to be clear, then it's anyone with a Visa debit card, which comes with just about, I don't think you can open a checking account these days without getting one of those, it seems. So it's anyone with a Visa debit card that's how it's backing on, it's piggybacking onto the debit card, right?
Yeah, absolutely. So if you're a merchant and you want to pay out, suppliers or your customers, you want to implement a B2C flow for sellers on your marketplace, for example. Anyone with a Visa debit card can receive those funds in real time. And if you look at some of the other RTP schemes here in the US, they can't reach all of those DDAs here in the United States yet.
Okay, Zach, turning to you, Justin said that you guys have been working together for many years, and I'd love to kind of get your perspective of what's it like to work together with Visa. What has been the Checkoutcom experience?
Well, I personally, we were joking. I don't think I've been invited to the fancy Visa suites yet. So hopefully,
shame on
heard
me.
my Paris 2024 tickets.
That's right.
Yeah, listen, it's their world's class. It's Visa, right? It's their knowledge when it comes to payments is phenomenal. Every time we sit with them, we learn more about what they're seeing in the market, and I think we fashion ourselves as well as a very deep payments company, and so we love nerding out over all the details together and swapping notes. And I think that's been part of what has created the foundation for the trust-based relationship that we have is just our mutual deep fascination for the details and trying to really work through them together. I would say it's been interesting given the length of the relationship to see how the market reaction to Visa Direct has evolved. And Justin gave a broader, I think, explanation of what Visa Direct is capable of. I'm talking specifically about maybe AFTs and OCTs, OCTs in particular. That's really been the bulk of the cross collaboration. And so just to see the evolution of OCTs led by Visa Direct and Justin's team has been an interesting journey. For the you mentioned, Peter, that OCTs and real-time payouts have become something that is more of a nice to have. I would counter and say in certain industries and in certain types of use cases, it really has become necessary. It started with Uber and some of the gig economy marketplaces where you put in a bit of work and you want to get paid immediately for that work instead of waiting. And so that was really, I think, I mean, Justin, you probably have a take on the evolution, but that was one of the main use cases. The second use case that we saw even a couple years ago back was the fintech and gaming cash out use cases. So you'd upload funds into some sort of investment vehicle, whether it's stocks or crypto or something else, and you wanted those funds to be dispersed out quickly, likely internationally, to be able to use those funds for whatever shopping you wanted to do. Since then, it really, those have become table stakes features to include in your offering if you're if you're a gig economy marketplace or one of these fintech apps. The interesting new use case that we see a lot of this demand for OCT, it's still within marketplaces, but it's really third-party sellers on marketplaces or even digital goods content creators that also want to get paid immediately for sales that they've done, as opposed to waiting to get paid out later on. And that's extended to other things like remittances. We talked about early wage access a little bit earlier before. Why do you have to wait 2 weeks for your paycheck? Like, you can take a portion of your payment now after you've finished as a W-2 employee, not just a 1099. So there's a lot of different things that are becoming more and more. Consumers are getting smarter and employees are getting smarter to ask these sorts of questions of their employers. And I would say we were at chapter 1 of OCT talk in the market. I think now we've officially flipped to chapter 2, just based on what we're hearing from these, as Justin said, like frontline conversations that we're having with merchants across the country.
Right. Yeah, I love some of those use cases. I think they're, there's when you start sort of getting, I think, used to real-time payments, you can start to say, well, why isn't this real time? Why? And I can imagine that the demand is only going to grow as consumers and small businesses get a taste of this. But so Justin, I mean, we've got, Zach just touched on some of the use cases there, but can we sort of dig into this a little bit deeper here? Where are you seeing increased adoption, and why is it becoming popular and more popular today?
Yeah, no, I think it's a great question, Peter, and I know Zach touched on a lot of the use cases. I think to answer your question, like very specifically, I think consumer expectations have just changed, and they're changing in every market again, but in North America certainly. The rise of everything on demand, everything real time across every industry, I think is really starting to impact payments. And if you look at, just to be totally frank, like where we are, relative to some other countries in terms of real time payments, we're just catching up. And I think it's, we can all debate where we are, whether it is sort of, early adopters are still able to command margin versus certain industries where it is table stakes. And we're talking about that earlier. And I think, that is actually different depending on the, industry we talk about. But I think the consumer expectation and all of the talk around FedNow and obviously the ways that the TCH RTP made, I think it's really starting to impact sort of the everyday consumer in the market, who is looking, that he can get, I don't know, soap delivered literally same day on Amazon or on DoorDash, but his payout that he's already, earned on Uber or on his earned wage platform still takes, depending on what settlement window you'll catch on ACH, a day or two, and if it's a weekend or holiday, maybe the next Monday. It's just those expectations and that misalignment, I think, are really starting to drive into payments from a macro level. But I think if you look at individual clients and customers, and I think, what Zach was talking about, I think in certain industries, implementing real-time payments can give you an edge. Like right now, it can differentiate you. You could still be an early adopter, an early mover, and you could still probably command some margin there. In other industries, if you haven't done this already, it's probably table stakes, and that's just something you need to do to preserve, your customer base and just catch up. So I think it depends on the industry, but I think some of the points Zach made earlier. We are seeing this demand, and we are seeing it across the board. And Peter, not directly to your question, but I do want to spend some time, like 30 seconds, talking about Checkout.com and our relationship there too, and why I think that's important in this whole conversation around real-time payments and adoption. And if you are a customer listening to this, I think another part of the differentiation that we have as a network, and our partnership with Checkout versus some of the other real-time options you might have, is the experience that we have with payments and money movement. Not only Visa, but also Checkout.com, and the whole sort of wrapping of a transaction, all the value-added services, whether that's like compliance and fraud, validation, dispute management. Visa and companies like Checkout.com specifically have been doing that for a long time. And that value-added services wrapping, I think, also differentiates, Visa Direct and sort of the card rails and Checkout.com versus some of the other options out there.
Okay, so if you have a question for our esteemed panelists here, you can hit the Q&A button. We're going to get to those shortly. So Zach, when you're looking at this partnership with Visa Direct, where are you seeing the most growth today? And maybe you can sort of dig a little deeper into some of the market segments there.
Sure. I think the way Justin overviewed the market is spot on. There's certain industries where this has become table stakes, and there's other industries where you're still an early adopter, and this is a differentiator. I would say on the table stakes side, as I said before, it's really it really is I'm gonna dived in too deep in my preamble, but it really is the depth of the feature set that is what where we've seen the most fruit in the relationship. I'll just pick on one particular faction of it. Like, how are you funding your payout? Are you funding it via your acquiring pay-ins, or are you funding it via a balance that you want to top up repeatedly over time? How do you want to top up that balance? How are we monitoring the amount that's in the account? For different businesses and different use cases, you're going to have different answers to that question. And so it's not just enough to check the box for a merchant and say, hey, we offer real-time payouts. We also need to be able to do it in a way that meets the business where they are and solves the business problem for them, because liquidity is a very important dynamic, reconciliation is a very important dynamic, and competing priorities is a very different tough dynamic. So I would say that's on the first category of the, where the relationship bears fruit with the companies that are using it today. And with the sort of new use cases, I mentioned a few of them earlier. I'm really fixated on the third-party seller. That's really where we're seeing a lot of exciting traction. You think of platforms that are offering, you're listing a micro event, a small community event on a platform, or charitable giving, or any sort of, as I mentioned, content creation, right? We see a lot of gig economy content creation type use cases. As put it eloquently, like, you are, as a platform, providing a lot of value add for those sorts of merchants by being able to offer them and their customers a unique and delightful experience that is going to get them stickier on the platform and prefer your platform to your competitors. And again, it's the flywheel of us being able to take what we're hearing in the market, gaps that we see in the product, sit with Justin and team and incorporate those into the latest and greatest offering. I still think we're in early innings of the Visa Direct S curve, and so what we're building now, I actually think will continue to get stronger and stronger.
Right. So what's involved in the implementation? Someone's listening here, and they would like to kind of start exploring this. What's involved? How complex is it? How much time does it take? Like, what are you guys kind of how do you sort of, I know it's going to vary obviously with what someone specifically wants to do, but can you give us give the audience some indication of how complex something like this is to implement?
Well, if it was very complex and time consuming, it would be very hard for us to build a business off of it. So just philosophically, we try to make our APIs super simple, our documentation clear. Everything is public. You can go on the checkout.com website and /docs, and you can see all of our public documentation. And so from a technical implementation standpoint, it's quite straightforward. And as I mentioned at the outset, all of Checkout's product and features are offered through a single API. So you integrate our API once, and as we make updates to our Visa Direct product or any other product that we have, it's sort of like a Tesla system where we push those updates out to our customers, and all they need to do is flip them on to be able to get the latest and greatest products and features from Checkout, because it's all done through that single API. In terms of the other streams of onboarding, like anything else, there's a contract. And then there's also a registration that has to happen with the schemes with Visa. But those are mostly administrative, and it tends not to be a super heavy lift. So generally, our goal is to make going from zero to trying it out as simple as humanly possible, because the goal is to have customers integrate us with ease, and every company is busy and every company has a lot of competing priorities. So we make this a light lift.
Gotcha. Okay. So let's
Justin, anything to add on that? I don't know if there's anything from your side.
No, I think you covered it pretty well.
Okay, so let's start getting to some of the audience questions that are coming in here. Maybe we'll start with this one here. What advantage does real-time pay to card have over FedNow payments, and what is the future of ACH?
Yeah, so that's a tough one. I'm not going to talk too much about FedNow or the TCH RTP. What I would say, we talked a little bit about this earlier. When you talk about some of the differentiating factors, I would just say, and where FedNow is now, they're early stage, they're still growing, they're still onboarding banks and building out the network. And I think that they're going to grow really quickly, and I think it's going to be a great a great product and capability set here in the US. But what I'd say about FedNow is it's still really early. And it was the same with the TCH RTP when it came out in 2017. I think reaching ubiquity is going to be a journey for them, a journey we've already been on. And I think, building out the resiliency, the compliance, and the security around the network that, we've also had to build out, I think is also going to take a little bit of time. But I think two interesting aspects, one of which Zack touched on, I think are things that, RTPs don't necessarily do. It's not a part of sort of their native functionality. And the first is the account funding side. So we're talking a lot about a payout, a push payment. That's what Zack was mentioning, the OCT, that push to card. And obviously that card is attached to a bank account. And that's really, I think, where FedNow and TCH RTP are playing. But when we talk about account funding, bringing, a pull transaction, whether you're a neobank, a neo brokerage, a wallet, or P2P platform, that first leg is really important in pulling those funds on, to load your Coinbase account or to load your Robinhood account. And I think real-time account funding right now in the US can't really be done on ACH, right? Even if you catch the next settlement window, it's still sort of, T0 is, if you're lucky, generally T1, T2, T3 in terms of the actual settlement of those funds. And so being able to fund an account, and Visa Direct does that all in real time, good funds, being able to fund that account in real time is really important. If you're going to think about something like sending a remittance, make sure you have those funds, or fulfilling an investment conviction. If you want to go buy Tesla stock, by the time those funds settle, it may be too late. So I think that account funding transaction is something that is really important, and Zack talked about, that I think is hyper relevant, especially in this fintech world. And second, RTPs are inherently domestic in nature. We are seeing some, trends, for example, in Southeast Asia, where we're seeing some bilateral agreements, but it's still generally like a pretty domestic scheme. Where Visa Direct is cross-border, it's global. And so even obviously we have push to account rails where there are no cards directly into a bank account globally for cross-border payouts, and same to digital wallets. We just did an announcement with Tencent in December, so we can now push funds directly into a WeChat Pay wallet. But even just on the card side, which we're talking about, a capability that Checkout has natively, it can bring a client on live today. There's 3 billion debit and prepaid credentials, Visa credentials globally. And you can hit a pretty large fraction of those 3 billion cards by that single integration. So if you're in the US or in Europe, and you have a relationship with Checkoutcom or one of our other enablers, and you want to be able to send funds, whether that's a disbursement or a remittance, you can do that from one single hub and reach 2.5, 3 billion debit and prepaid credentials. And many of those in real time, same type of experience. And that is something that I think is inherently, specific Visa Direct right now. It's something that RTPs don't have. So I think that's really a key few differentiators from, a Visa Direct perspective.
Mm-hmm. Mm-hmm.
Yeah, I'll add to that the pay in first leg, like you need to at some point upload funds in order to disperse them out. And I agree with Justin, it's a problem we see a lot. And merchants will go so far to actually advance those funds from their own balance sheet in order to be able to provide that experience to their customers. I think the similar dynamic also exists on the pay-in side generally. I mean, Visa, MasterCard transactions are 2/3 of the total transactions in the country, but ACH volume is still 2/3. And so I don't think the opportunity for Justin's company and the will not be named competitor, I think there's still a lot of volume to go after, and the intrinsic advantages around dispute resolution and having clear rules, all of the various endpoints and credentialing that Justin mentioned before, as well as the global ubiquity, like those are really big components of the global card schemes, which are just different than local bank rails.
Right. And we also, of course, in this country still have checks, which, they're on their way out, but they still seem to be stubbornly persistent. But I imagine that a lot of that is moving. It's not going to go checks to ACH to real-time payments. It's probably going to go checks to real-time payments, right? For a lot of the people that still demand to be paid by check, which I think is crazy in this day and age. But
a lot of cash too, Peter.
Yeah, of course. There is
US,
cash.
globally, especially.
Yeah. But okay, another question here. What is the actual timeline for real-time payments? Are we talking 5 seconds, 30 seconds, 5 minutes? When you do a pay to card, when does it show up?
Yeah, it's a good question, Peter. Our SLAs are technically 30 minutes or less. But in all the latency testing, especially we've done domestically, like everything is pretty much straight through. So in our latency testing, it's generally been on average 12 to 22 seconds. So it's not technically real time, but it's pretty close.
I think if you say less than 30 seconds, I think you can say that's real time. Okay. Here's another one. Use cases are mainly B2C today. Do you see any progress? Let me see. Do you see any progress in using Visa Direct in a B2B environment?
Yeah. So I think on that one, I guess at first it would depend on how you define C. Like all of the gig economy use cases and all the 1099 use cases that we talked about, like you could consider those B's of one, right? If you're an eBay seller, if you're a host on Airbnb, or if you're driving for Lyft or DoorDash or Grubhub. So I would consider those actually be B to small B payments. I think on the other front, and I think Visa Direct obviously domestically, and we're talking about this card only rail, and we do again, have push to account, especially globally. We do actually service a lot of B2B flows, but we're talking about sort of this card rail. I think the B to small B set of flows is really interesting, and I know a lot of folks that are listening on the call are payments folks. One of our earliest use cases here in the U.S. was actually a merchant settlement, a real-time merchant settlement use case, and that was with Square. And so this was in the early days. This program actually helped build Visa Direct. So back 5-6 years ago, when the Square dongle was ubiquitous at every local coffee shop in San Francisco, the Square built out, I think, this really ingenious offering where they would allow you to cash out whatever credit debit card swipes you had incurred at any point during the day in real time. Because if you're a small business owner and use any type of sort of POS, or even online in the e-com space, you'll know that there's latency on the settlements, from your bank to the networks and issuers to the networks and vice versa, till those funds are actually deposited in your bank account. It could be anywhere from 1 to 5+ days. And so Square offered them an instant merchant settlement on whatever accounts on payments you'd already accrued for, a percent fee. I think it was actually more than a percent. And they use Visa Direct for all of those flows. And we've seen that sort of instant merchant settlement use case or on-demand merchant settlement proliferate. I mean, we have QuickBooks from Intuit as well, obviously Square and many others that are using that, PayPal. So I think that is a B to small B use case that we've seen continue to grow. And I think there are other sort of B2B flows, but again, on the card side, we are a little bit limited in the sense that, if you're Macy's, you may not be, wanting to receive those funds onto a card. But, I think there's a lot of runway left on the B to small B flows on the card side and a lot of runway on the B to C flows as well, and G to C and P to P and A to A, me to me.
Any letter to any letter. Okay. Okay. Another interesting question that's come in. What are some risk or fraud considerations and how are you mitigating them?
Yeah. So,
go for it.
Sure. I think on this one, and I won't get into too much detail. I'll just say that there's a whole suite of value-added services that we have that we offer. Checkout is offering to their partners, and I think there's been a lot of learnings over the past almost decade. I think working with Checkout on this, that I think the RTP schemes are also learning, and we have a whole suite of fraud prevention, compliance, transaction monitoring, and dispute resolution processes and APIs and value-added services all built in. For example, ACL version 6, as someone enters their PAN to receive a payment, you can instantly ping that issuing bin, of that card and figure out where that card has been stolen. Is it active? We have a product called A&I where you can actually do a name match to make sure the name entered matches the name on the card. So there's a whole suite of products like that, which actually Checkout would be offering to their partners that can help mitigate sort of the fraud risk and the compliance aspects. And Checkout, I think, actually offers additional products on top of that to sort of monitor programs.
So how big of a problem is it, Zach?
It's actually counterintuitively, we were joking about this earlier. No one really complains when they have extra money in their bank account. I think most of the fraud concerns that you see on the pay-in side, which we spend a lot of time on as a company, are quite different on the disbursement side. So I would say it's certainly a problem. By default, you need to verify the address of a card and verify all of the card details, as Justin mentioned before. That's good practice and hygienic to do. But in terms of the risk of a fraud attack, it's quite different than what it is on the pay-in side.
Okay. So I want to talk about We've talked a bit about the gig economy, content creators, marketplace sellers. What is next for the real-time payments ecosystem? Particularly, wanted to sort of think when you answer this, keep in mind sort of the digital economy space that many of us work in these days. So, what's next?
The single most interesting use case to me that I get most excited about, and it's one of the things that I get up for in the morning. I think remittances are an opportunity to really create game-changing outcomes for families and friends all over the world. To Justin's point around the Visa Direct reach and the endpoints, it should be easier than it is for someone to remit funds back home instantly to a family member's card so they can use that card. And there are very few companies in the world. Visa is the top company that has that global reach and the network of endpoints, where if you're able to figure out how to utilize that in order to provide the market with something that makes their lives easier and simpler and more real time and immediate, like that to me is the single most exciting use case for pay to card.
Yeah, and Zack stole my thunder a little bit, but I completely and wholeheartedly agree. And I guess I'll even take a step back and go more broad. I think cross-border payments generally, especially sort of, and I'll just say money movement, cross-border money movement generally. I think remittances is absolutely like the core use case there, and something we are investing as Visa and Visa Direct specifically are investing a lot of time and resources into. Really continuing to serve that segment, because I think we actually partner with a lot of the large remittance companies today, and you can go Google Visa Direct and any of those companies and learn about our partnerships there. But I think when you think about the cross-border money movement flows, when you talk about digital platforms, Peter, and that question specifically, a lot of these digital platforms, whether you're an app like a crypto app or a creator platform, you inherently grew up global. And you have users and viewers and let's just say creators or sellers or traders globally. And it's hard to service and it's hard to leverage global payouts, and very expensive and very slow. And so for global and digital platforms, whether you're a exchange, whether you're a creator platform, I think all of those in addition to remittances, there's actually tons of flow that move from country to country. And those are flows that I think are really, really well serviced on the Visa money movement platform, whether it's a push to card transaction or if you're in China, a push to push to wallet transaction, to both Ali or to WeChat Pay, and even countries where there may not be cards, there may not be as many wallets. We can push directly to a bank account as well. I think those flows from a cross-border perspective, especially outbound from the US, where a lot of the funds will originate from to be then pushed outbound. I think those flows are very underserved and something that we're putting a lot of time and effort to help crack with Checkout and other partners.
Yeah, no,
I can give.
Go on, Zach.
Just one interesting use case that popped to mind, which I think is like it's quite an unconventional one, but one that we've been working with a client on. They help companies sell their shares. And so what will happen is one of their clients will come to them with employees who worked for a certain amount of time in the US, and then they go home and there's a liquidity event and they need to be able to get the money to the employees that are now scattered around the world, or maybe they have a remote employee base that are under a US equity plan, or the funds are coming from a US entity, even if they're not under US equity plan. They need to get funds after that liquidity event to all their employees all over the world. And if you look at the bell curve of what equity payouts are for liquidity events, you have a couple big winners all the way at the top, and then you have a long tail of employees who earn some meaningful money, but it's not, we're not talking about hundreds of millions of dollars or millions of dollars. And so it's an interesting use case to show how dynamic this rail is becoming in a way that is quite different than what I'm sure even the Visa Direct team had originally envisioned. Which is why when Peter, you ask what's next, it's kind of hard to forecast because these new use cases and requirements come up all the time. And that's as I was talking about at the beginning of the session, it's those sorts of things that we can then bring back to the Visa Direct team and say, hey, this is something that we've heard that's interesting from the market. Here's a feature that actually would make this even easier for the customer. Here's some feedback that can actually play into our next iteration of how we build the best product together.
Yeah, just onto that. While we're talking about use cases, because I think that really is how we make it real use cases and customers to folks. Another client we're working on together with, Zack and the checkout teams is a client that moves like gaming, not like gambling, like video game winnings. And they pay out video game winnings, and the flows are, I mean, surprisingly large in terms of the number of transactions and all these tournaments that they host and they pay out. And a lot of those payouts go overseas. And it's very challenging for those companies to move those funds, cheaply and easily. And so, we're working with Checkoutcom to help facilitate those, gaming payout flows as well, which is a segment that we're actually seeing a lot of increased demand from, I think, and certainly a segment I think Checkout has done a really good job of getting into early as well. So yeah, tons of use cases. They continue to pop up as we, really dig into, especially, what we think the future is, the cross-border flows and all these innovative client segments that are popping up.
Right, right. So I want to just ask about people in fintech or anywhere in financial services for that matter. Everyone realizes that, we're not going back to more checks and more cash. We're not going back to having, longer time periods where people will expect their money to take longer. It's only going to get shorter. So what are I'm just curious about what are the reasons that people choose not to adopt? I mean, are they just, I imagine people aren't sticking their head in the sand, and obviously your service isn't free, but I'd love to kind of tease out, as we sort of come towards the end of this session, what are, the future trends that are really moving in one direction, it seems like to me, and how that's going to impact businesses who say, no, we don't need real-time payments at all. We're not going to worry about it. What's, I'd love to sort of get, when you're talking with clients and they choose not to adopt, what's the, what are they, aren't they running a real risk of, disenfranchising their customers?
Yeah, at least from our side, the conversation very rarely is we don't need this. I think the conversation is more with an existing install base that's used to operating in a certain way. Do I want to uproot and displace the behaviors with that install base, even if they're better behaviors? So if you have people that have been paying their utility bills by check for 25 years, is that really the target demographic to try and move them to a real time? Yeah, real-time payment so I think that's where we tend to see the pushback is just around the existing install base. But if you look demographically of who's using checks in cash, tends to be the older populations that have been doing things a certain way. And as you go younger and younger by cohort, you see that they're more inclined not just to use digital payment methods, but also to be more eager to try out the newest and latest offerings on the market. So generally, the conversation that we have is, you're starting with a certain segment of the population, probably new consumers, offering them this service. And then sometimes you're offering the existing install base the option, not mandating that they make the change.
Yeah, and for me, Peter, I wholeheartedly agree with all that Zack just said. I think in addition to that, I think the wins, I don't know the right say. I think things have changed in the past 18 months. I think noticeably in the market. So I think I have fewer conversations with concerns or no, and it's more when. And is it right now? Do we wait? Is it 6 months? For really big enterprise clients, it's always, well, we have our tech roadmap done for the year. It'll make it on next year. That's really more of what we see now as opposed to no. And I think that's why it's important to have partners like Checkout who can move quickly to onboard and integrate customers and make it easy and seamless, for the product and technology teams to digest. But I think it really has, especially in North America. I think that things have changed. So I think we're getting there.
Right. Okay. So as we close here, I want you both to answer this final question, and it's about advice. Like, what advice do you have for the audience as they work to build out the business case for real-time payments and the strategy for doing a new pay to card program?
Yeah, so I guess for me, the very first thing I would say is the time is now. I think the market is ready, the ecosystem is ready. We have a bunch of partners, and when you're looking at networks or rails, I'd really look at the clients that you're trying to serve, their experience. Can you reach all of them? What did like the very nitty gritty weeds things look like? Are there dispute processes? What are those value added services? I think it's more than just that payment rail. I think all of those other considerations around the full product that will face your customer are things that you should be thinking about. But fundamentally, I'd say time is now. Pick up the phone, shoot me a message. Shoot Zack a message. I think the time is now.
That was going to be my advice. Reach out to Justin or myself, or both of us. I think that's the easiest way to make a business case and assess of whether or not it's worth it is talk to those of us who have been in this game for a little bit. And then also from philosophically, part of what we've experienced at Checkout is the more transparent we can be with our customers and our prospects around the reality and the limitations, the better. The last thing we ever want to do is pull the wool over someone's eyes and they end up spending time on a project and they get upset because they think they were going to get one thing and not the other thing. So you have people like Justin and myself and our respective teams that are eager to share what we know and give you as much information as you need to make the right decision for you and your company.
And just final word here. If you want to find out more, you can just go to visa.com/visa direct. That's where there's a whole bunch of information. As we wrap, I really love today's conversation. I feel like I learned a lot. I'm particularly interested in the use cases. The remittances thing that you guys both talked about, I just feel like that's something that it needs to happen. I mean, it's still crazy that in this day and age, people are still paying 7% fees when they're moving money back to their home country or just to any country. And I feel like that is a problem that is worth tackling. And to get down to, you can reduce those costs by 90+%, 95% in many cases for those cross-border remittances. I think that's super exciting. And as I said, I mean, we're only going one direction here. We're not going back. Some of the use cases that were talked about today, I think, are extremely important. And again, we're in this sort of transition. I mean, this decade, I believe that we are going to exit this decade with real-time payments as an expectation that most consumers are going to have. Particularly, I look at my kids. My kids got Christmas presents from their relatives in cash, and the first thing they do, they give it to me, and they said, "Load up my my wallet, can you?" So I don't deal with cash. This is a generation that's coming through that are used to things happening instantly, and that is, I see, the world is going. It needs these kinds of solutions that we've talked about today, and I think they're going to become an absolute must-have in the very near future. So with that, I want to thank Justin and Zack for their time. Really, really fascinating discussion. Thank you, of course, to the audience. And thanks to Visa and Checkout.com for making this session possible. Have a great
Thanks,
day,
Scott.
everybody. Yeah. See ya.
Thanks.